Should you buy Tesla stock before the stock splits, or should you wait for the split and then buy into Tesla stock? Or should you sell your shares of Tesla stock before the split? These are questions I want to answer in today's video because I've been getting a ton of questions on this from all of you guys. So I do hope this video helps you with my perspective on what's going on right now with Tesla stock. Now, unless you're living under a rock, you know that Tesla has been on a wild run, breaking $2,000 a share recently as it gears up to split its stock in just about a week. Now remember, if you're holding Tesla on August 21st, you are eligible for the stock split that will come into effect August 31st. And when you wake up that morning, you look at your Tesla shares, you'll have 5 times more shares in your account than you do today, but the value of those shares will be 5 times as less. So all in all, it ends up being the same thing from a total value perspective. But now with Tesla really pushing $2,000, going higher than $2,000, investors are wondering, is it time to really sell the stock? Is it time to maybe buy more shares before the split? Because, maybe we move higher after the split. And the honest answer is that it doesn't really matter if you're solely basing it on the stock split. Valuation is going to be the same before or after. Doesn't matter on that regard. But there are a few things that has raised a bit of a concern for me personally as a Tesla shareholder that I want to discuss. Now guys, just a quick note, if you enjoy my content, just consider smashing that like button down below. It helps the channel out a ton and I appreciate that. So now we've seen some real extreme opinions when it comes to Tesla stock. No secret there. The biggest public bull by far known by the general public is ARK Invest, and they have a price target of $7,000 a share on the stock. But here's the kicker, they have a target date of 2024, so there's still 3.5 years for this to be realized. And guess what? The reality of the situation is Tesla is a volatile stock and will probably continue being volatile. So the charts could end up looking like this if ARK is correct and we actually do approach that $7,000 mark. There will most likely be ups and downs in the stock, and many retail investors, maybe even some of you watching here today, may panic sell this stock if we see Tesla have a significant sell-off. But guys, this is the reality of the stock market. Stocks don't just go straight up. Stocks don't just go straight down. They usually have kind of a wave pattern where you have run-ups, then you have pullbacks, then you have run-ups, pullbacks, etc. And if you're a long-term investor, you wait for those pullbacks to buy in, where the general public who is just looking for quick gains tends to get in near the top of those runs, and when it pulls back, that's when a lot of fear sets in. There's absolutely no way to time when we see a pullback or when we see a big run in the stock. However, if you have cash sitting on the sidelines, you can take advantage of those situations when it does happen. Now, I'll say this as an aside, it's just a complete guess and, complete speculation on my part, but I think we're pretty much close to that high run up, and I think it's time for us to cool off and see a good pullback in Tesla stock over the coming weeks. Now, if you are wondering if you should be buying more Tesla stock here at these prices of $2,000 per share, ask yourself this question. If Tesla pulls back 50% tomorrow, you wake up tomorrow, the stock is at $1,000 per share, how would you feel about that? Would you panic? Would you stress out? Would you go and sell your shares? What would you do? If the answer is yes, I will be selling if that happens, then you know what? Maybe it's not a bad idea to consider reducing your position right now. However, if on the flip side, you are like, oh wait, if it goes down to $1,000 per share, I'm going to be buying a ton more shares. I don't care if I'm down on my position. I'll just go in there, average down, and I think over the long term, ARK is right and we will see much higher prices. Now, if that's the case and you're in that camp, which, I'm in that camp, I will actually be pretty happy to see much lower prices than Tesla, then I think the best thing to do right now, at least what I'm doing, is just continue holding shares. I'm not going to be buying at these levels, not going to be selling at these levels, but I will be watching closely for opportunity to just add a little bit more into my position on any pullbacks. In my opinion, this is kind of the best way to approach the stock market. I've done this with plenty of stocks before, and if you think about it, it's kind of a win-win situation. I see Tesla right now $2,000 per share. I'm happy with my gains on the stock. But I still think there's a lot more upside over the long term, so why would I sell? If it goes higher, great, my shares go higher. If it goes lower, I can add more to my position and build up an even larger position in Tesla. It's a win-win situation from my perspective, and that's why I absolutely love long-term investing. But of course, guys, all of this really depends on your outlook on Tesla. If you think a Tesla at $2,000 per share is just out of whack, it should not be this high, it'll probably never maintain this level ever again, and it should sell off, and it'll probably never hit this valuation in the future again, then yeah, maybe it is time to sell and realize those gains. However, if you believe in ARK Invest and all these bull cases out there, there's clearly a lot more upside potential to go. Now, an interesting point I want to bring up here is despite bulls like ARK, the general consensus among analysts with Tesla stock is a price target of $1,295 per share, which implies a 35% downside from current prices. Now, are these analysts right and is ARK wrong? Maybe, maybe not. But so far, bear analysts have been dead wrong on the stock, and they may be able to sway negative sentiment in the short term here and there. But now that Tesla has momentum and has shown profitability and has shown scalability and everything's trending in the right direction, the bear case for this company is getting weaker and weaker and smaller, and there's less substance for these bears to hold onto when it comes to Tesla and Tesla stock. Another thing to note is insider activity on Tesla, and I'm seeing a common trend here. Sell, sell, sell seems to be what insiders are doing at Tesla, and there seems to be some pretty large sell orders put in during the recent months. Now, I always say this, guys, so take this with a grain of salt, but insiders typically know more about a business than the general public, so maybe they see something coming that they don't like. At the same time, maybe they're just taking advantage of the recent price run up and cashing in profits. Nothing wrong with that either, but what's interesting is that it's pretty unanimous here that they are selling and no one's really buying shares at these prices. So that kind of tells me that, it's pretty much across the board that they believe the price of the stock today is expensive and possibly overvalued. So now, knowing all this information, is it better to buy Tesla before the stock split or after the stock split if you are still bullish? I'll reiterate this point first. It does not matter. It does not matter if you buy it before. It does not matter if you buy it after. The valuation is still the same. The market cap is still going to be the same. Tesla today is sitting at a $367 billion market cap. And if you believe that this is justified, you're a huge Tesla bull. And if you believe that, Tesla is executing well and this is a good valuation for the stock, then like I said, just continue holding. For me, it's really hard to justify buying more shares, so I won't be doing that, and I'll just be sitting on the sidelines here holding my existing shares before and after the split. If you've been following the channel for a while, you guys know I was buying Tesla back in 2019 at like a $200, between $200 and $300 range, and I built up a good position there. And as of today, Tesla is my largest position in my portfolio. So clearly, I'm a massive Tesla bull. Clearly, I have a long-term outlook on this company that I think has a lot more upside, but I'm also going to be realistic. I think $2,000 per share, almost a $400 billion market cap, may be a little bit too high for where the company is at today and where it's going to be at in the next year or so. Also note that in about a month or so, Tesla's going to be hosting its annual meeting, and following that, they will have their long-awaited Battery Day event, which will have a lot of media coverage and eyes on it, so I'll be sure to create a video on that when we get details from this event. I think that the run that we're seeing in the stock right now, it's moving up a few percent every day, is because of the optimism and the hype around this company right now. Investors are excited about Battery Day. Investors are excited about a stock split because, once it splits, maybe a lot more investors can buy the stock. And the market seems to be pricing that in. So I would not be surprised, mark my words, I will not be surprised if we see a sell-off in Tesla after the stock split and after Battery Day, unless there's something that Tesla pulls out of the bag that investors were just completely not seeing that'll be another game changer for the company. So guys, just be careful out there. Tesla, great company, extremely bullish on the stock personally, but at today's prices, hard to justify buying more shares, whether it's before or after the split. Doesn't matter. Now, if you agree or disagree with me, let me know in the comment section down below. I love hearing from you guys on every video that I create, especially Tesla videos. And to make it fun, leave a bull case and a bear case down there so we can see both sides of the argument. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.